Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, April 29th, 2022. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. Simple Market Signals is a proprietary trend direction and risk management model. Now, we will come back to this chart in just a couple of seconds, but before we do that, I want to show you something. Now, I just introduced myself. You know, I'm the president and founder of Simple Market Signals. I want to show you what Simple Market Signals could have done for you so far this year, okay? So please stay with me because this is super important that you understand the opportunity here. So let's start on January 3rd. That is the all-time daily closing high on the S&P 500 so far, January 3rd of this year, 4796.56. The very next day on January 4th, we hit the all-time intraday high. I just abbreviated that, ATIDH, 4818.62 on the S&P 500. And just about a week and a half later, on January 14th, my model, my Simple Market Signals proprietary model, which took me over 20 years to develop for myself, guys, produced the first of several warnings that the market was changing, that things were getting dangerous. And that came out at 4662.85 on the S&P 500, just 3.23% below the all-time intraday high. Okay. Now, my model is sensitive, but you don't want something that's so sensitive that it knocks you out of the market before, you know, a peak. All right. So just think about this: 3.23% below the all-time intraday high, and yet right now, where we finished this week. Okay, and we got a lot to talk about, so please stay with this entire video, guys. It's going to be super educational. But we finished at 4131.93 this week. We're currently 14.25% below the all-time intraday high on the S&P 500 where we closed this week. All right, and that first warning signal came out at 3.23% below that all-time intraday high, and here we are at 14.25 below. All right, so I just want to give you a taste of what that Simple Market Signals model could have done for you, okay? And there's been numerous warnings since, and I'll give you more information at the tail end of this video, so stay with me here. But in the meantime, we have a ton to talk about. So as I alluded to, we closed this week at 4131.93, okay, down 3.27% just this week alone. And this week we finally closed below 4,200, right? We've been flirting with this during this downturn, but the previous low close during this downturn was 4204.31 for a weekly close right here. All right, and then of course we had that bear market rally. Any of you that have been following my work for a while, you know that I warned you, right? And I know a lot of people were upset because they didn't catch this rip or whatever, but I warned you, when you get these kind of rallies up, in such a short amount of time in a very negative environment, they most often are bear market rallies, even though technically we're not yet in a bear market, and that so far is what this appears to be. All right, so now we have 4 weeks in a row where we've been negative on the S&P 500, and if you look to the left here, that hasn't happened in well over a year. Okay, it didn't happen during 2021, and so 4 negative weeks in a row on the S&P 500 is a big deal. We just concluded that. We now closed below 4,200, again closing at 4131.93. And this is the lowest weekly close on the S&P 500 since back here in April of 2021. All right, so we've got to go back over a year now, about 13 months, to get to a week that had a slightly lower close on it than where we closed this week. And even if we look at the 4350 level, this line right here, all right, this weekly close below 4,200 was only the 6th weekly close below 4350 on the S&P 500 since June of last year. All right, and 43.50 again. I just want you to understand how important this 43.50 level is, because the fact that we've now closed below it and below 4,200, guys, it's a big deal. All right, this market continues to weaken. Now, we didn't hit our ultimate lows of the downturn this week. That happened at 41.1465 back here in February. All right, so even though we closed lower than we've closed for quite a while, right, well over a year. The lows of this downturn so far, 41.1465, and if we look at the all-time intraday high, which as we know was back in on January 4th, and we look at this entire distance that we traveled, I've ran the math up here where my cursor is now circling. So that distance of 41.1862 down to 41.1465 is a 14.61% max drawdown. We know right now we're down 14.25%. So we're close, right? But we're not quite down to the ultimate lows of this downturn yet. Where we're at now, we're down into some trading that we haven't seen since back in April, May, and the first half of June of last year. So, guys, this market does look like it's going to continue to weaken, and especially, of course, the earnings that we saw over the last few days from Apple, which wasn't bad, but Amazon was kind of concerning, and that is probably going to more than likely over the next few weeks continue to drive this market lower. I would encourage you, if you haven't already seen it, stay with this entire video first, but at some point over the next couple of days, I would encourage you to go out and watch my video, How Low Will the S&P 500 Go? I produced that about 2 months ago. It is a fantastic video. I just want you to really understand how low this market could go if we continue to get into this negative feedback loop, which it sure feels like we're in. And this is starting to feel kind of like 2000 through 03, guys, where you've got so much going on geopolitically as well as by the from the market. There's just a lot going on, and so it wouldn't surprise me if this market continues to go lower. There's not a whole lot of support. I'll give you a real quick clue here, but there's not a whole lot of support below where we're at until we get down into around 38.50. Okay, so just understand, we might get a reflexive bounce sometime next week because of the fact that we've had 4 negative weeks in a row. And so, some algorithms may kick in. You may have some dip buyers try to support the market here, but I question whether it's going to be enough to suspend this market for very long. It might hold us up, around the 4150 or above 4100 at least for a few days or so. But this is a dangerous market, guys. Now, we have had a rolling correction since April of last year, right? We know we've had these, these dips and these bounces, but we're again down to areas that we haven't seen since the first week in April of last year. So this is a very, very serious situation. Don't take it lightly, and and I wouldn't try to be a hero here. It's up to you, of course, how you trade, but I would encourage you to pay attention to the balance of the video. I want to share with you how I can continue to help you and how we can work more closely together, guys. But please understand that this market is no joke. And please, for your own benefit, stay with the balance of this video because I have some very, very important information to share with you. Now let's go back and take a look at how simple market signals could have helped you in the bear market that started in 2000, that ended in 03, and then next we'll take a look at the bear market that started in 2007, that ended in 09. So in 2000, you can see that the risk signal, the market mode signal, would have turned red right here at approximately 1450 on the S&P 500. In this risk signal, the market mode signal would have been red through the majority of this downturn and then turned green right here just under 900 on the S&P 500. So think about that. Any of you that lived through this, any of you that were invested in the stock market during this period of time, as I was, right? I was working for Oppenheimer Funds, the mutual fund company, during this time. But you can see here, guys, this huge drawdown, right? This hurts, and it lasted for several years, and it just felt like every time we were starting to pull out of this, something would happen that would send us lower. All right. And these types of downturns, these prolonged downturns that last years, they are brutal. But think about how much knowledge you'll have when the risk signal is red whenever we get to the next bear market, right? Whether it lasts a few months or a few years, when you know that that risk signal is red, you know what to expect, right? Losses are much more likely than gains, and so you can take the proper measures to protect yourself, and you'll have realistic expectations as to what is probably going to happen. But then when that risk signal turns green, you know that the likelihood of you making money has substantially increased. Okay. Now let's take a look at the bear market from '07 that ended in '09. And you can see here that the risk signal would have turned red right here, right around 1500 on the S&P 500. And you can see that the risk signal would have been red for the majority of the downturn. We did have one short green signal right here that lasted 1 week, and then the market rolled back over. And so maybe you would have had a small loss here, okay? But that's just the way any type of protective system works, guys. But think about this. Again, you could have got out, or went to cash or done whatever you wanted to do right around 1500 to protect your portfolio, and you would have had a green signal that would have came out around 875 on the S&P 500 right here in 2009. So 2 of these types of downturns in the course of a decade, and simple market signals could have helped you really protect yourself and really understand what was going on in the market and set realistic expectations for you in both cases. And when the risk signal turns green, as it did right here, you will know that the likelihood of you making money in equities has substantially increased. Why is simple market signals so important? Because market risk is the single biggest risk most investors face. And market risk is non-diversifiable risk. Market risk cannot be diversified away. And future investing success will require getting in sync and staying in sync with the stock market by using stock market-driven data. Simple Market Signals is built around a multi-factor stock market-based model. I'm going to repeat that. Simple Market Signals is built around, based on, a multi-factor stock market-based model. Simple Market Signals identifies the current level of market risk, giving you the opportunity to stay in sync with the stock market. Now let me share with you what subscribers are saying about Simple Market Signals. First, we are going to hear from KT from Michigan. I have been trading for many years. I did not realize that I have been trading in a completely blind fashion. SMS has given me the direction, literally, I've been desperately needing. This service allows you to clearly see what the market is doing. If you are remotely serious about trading or investing, you must try this service. Again, that's from KT from Michigan. KT, thank you. I appreciate that feedback. Next, we're going to hear from SC from Florida. And SC writes, I manage my own money and I am not a professional, which could lead to a disastrous outcome as it has for many. Simple Market Signals is the equivalent of having a personal money manager that keeps you invested when it counts and alerts you to the potential dangers ahead. Now, I want to point out here, guys, I used to be a money manager. I sold my practice in 2016. So these are the exact words that SC from Florida wrote to me. So I just printed it as is. But I want you to understand, I cannot give advice. But this is the feedback that SC from Florida gave me, so I appreciate this. So again, SC writes that Simple Market Signals helps you stay invested when it counts and alerts you to the potential dangers ahead. The service is extremely affordable and takes the uncertainty and fear out of being in control of your own investments. I have done very well using this system and consider myself lucky that Rodney's YouTube channel came into view one day. I highly recommend this to anyone who desires an easy system to produce positive returns in the markets. Again, that's from SC from Florida, sent from his iPad. And guys, I want to point out the reason I'm using just the first and last initials is for the security of my subscribers, okay? I have hedge fund managers, very well off, multi-millionaire clients. I have, people that are high up in various areas of the government. I have people from all walks of life. So just out of respect and security for my clients, this is the way that I'm presenting the information, just with their first and last initials as well as their state. Next, we're going to hear from FS from Massachusetts. Rodney is spot on in his reading of the markets. I was looking for a heads up to help me choose which side to use for vertical spreads. Again, that's from FS from Mass, and thank you so much, FS. I appreciate that. Next, we're going to hear from JV from New York. Now, I posed a few questions to my subscribers a few weeks ago, and this is the feedback exactly that JV from New York gave me with respect to the questions. So I produced it just as he wrote it. So the first question, what do you like best about simple market signals? What JV said was, one of the things I like best about simple market signals is that I have an easy-to-use tool at my disposal. I use the green, yellow, and red signals along with the general trend to help me determine how much equity risk exposure I want my investments to have in the market at any one time. I will either increase or decrease my equity exposure based on those metrics. The next question, what is important about simple market signals to you? JV writes, I am a conservative investor. My main goal is to preserve as much capital as possible during market downturns, yellow and red signals, and to optimize my returns during green light conditions. The next question, how has simple market signals helped you? JV writes, SMS helps me to determine whether to stay the course, increase equity exposure, or take defensive positions. For example, I will add additional funds to my equity investments during green conditions and move money to cash during red conditions. And the last question, how have you benefited from simple market signals? JV writes, one of the benefits of SMS is that it has reduced the stress from always looking at and analyzing market conditions and worrying about it on a daily basis. And again, this is from JV from New York. JV, thank you so much for the feedback. I really appreciate that. There's two major components to the simple market signals proprietary model. There's the risk mode, the market risk level signal, and then there's the general trend indicator. Let's start off with the simple market signals risk signals. The simple market signals risk signals, the market mode signals, are simply green, yellow, or red. When the signal is green, this is when you're going to have your easiest, lowest risk profits. And this is when the market is generally in an upward market mode. When the signal is yellow, this is when we have a soft market, and the market is generally sideways to slightly up or down in a yellow signal environment. And what you're going to find is when the market mode or risk signal, right, you can refer to it either way, but when the market mode signal is red, the worst losses, including bear markets, are going to happen in a red signal environment. So when the signal is red, the market is generally in a downward mode. Next, let's take a look at the general trend indicator. The general trend indicator measures the trend of the stock market based on our proprietary formula. The signal is either positive or negative. When it's positive, we're in an upward general stock market trend. When the signal is negative, we're in a downward general stock market trend. Now let's take a quick look at a few market mode risk signal charts for the last few years. We're going to start off with 2018, and you can see here what I was talking about, that most of your upward progress in the stock market will be made in a green risk signal environment. The yellow signal is kind of a sideways to slightly up or down signal, as you see here. And then the red signal, right, this is just 2018. We'll look at a few more here in a second, but you can see the red signal here that we had in the latter part of 2018. And then moving on into 2019, we came into the year with a red signal, and then it went green, and you can see the progress that we make here. Yellow, correction, green, yellow, green, yellow, green. So you can see that most of the yellow signals go back into a green. The yellow is kind of a short pullback in a lot of cases, but as we saw here in 2018 and what you'll see also in 2020 is the yellow signal can be that transition signal between a green signal and then a red signal, as we see here with the COVID sell-off in February, March of 2020. And again, as we see here, right, most of the upward progress in the stock market is going to be made in a green signal environment. So think about this, guys. As long as the signal is green, you can see there's just not a lot to worry about, right? And even most of these yellow signals, this is when we get that pullback, but it gives you confidence in knowing what the market is doing. Now let's take a look at a few charts for the general trend indicator. And just like with the risk signal, we're going to start off with 2018. You can see we came into the year with a positive signal, had kind of a chop here where we went back and forth between positive and negative for a little while in February and March. We had an outright negative signal and then went back into a positive. But you can see here, right, this sell-off that we had in Q4 of 2018, we've already looked at the fact that that risk signal went red, and you can see here that we would have had a negative general trend indicator signal as well. And then you can see here when the signal is positive, this is when you get the most upward progress in the stock market. And this takes us into 2020. Of course, we had the negative signal right here during the COVID sell-off in February, March of 2020. And this takes us again to the end of August, beginning of September of 2021. And you can see here positive, very short negative signal, and then a nice long positive signal. And again, just like with the risk signal, I'm stopping the data at the end of August. And if you want the most current information, please become a subscriber. The signals are delivered to subscribers in our weekly video newsletter. In the weekly video newsletter, you will get weekly updates on our proprietary market mode signal. That's our risk level signal. And of course, you'll also get the updated chart for that signal each week. You will also receive the proprietary market mode risk level signal on all 11 major sectors of the S&P 500. You will also receive a weekly update on our proprietary general trend indicator signal, and of course the updated chart for that. You will also receive market analysis on over a dozen charts every week covering all major areas of the stock market, including several international charts. So I'm going to cover small, mid, large. We're going to cover both a growth and a value ETF. I mean, guys, this is going to help you understand what's going on across the board. Of course, several charts every week on the S&P 500. We'll cover the Dow. We'll cover the triple Qs. So we're going to cover pretty much everything in there, okay? And so this is going to give you a really solid base every week as to what's going on in the stock market over and above our proprietary information that we're sharing with you. And then depending on what's going on, there will be occasional bonus material, not necessarily every week, but occasional bonus material, and this will be anything additional. From week to week, these things will vary, but these will be important and timely things that I feel that you guys need to know at the time that the information is delivered. Okay, so that'll be the occasional bonus material. To be fair to myself, I should be charging $97 per month or more for this information. However, you're going to get everything for just $19.99 per month. That's less than 67 cents per day. And to become a member of the channel and get access to the Simple Market Signals information, you will need to go to the Rodney E. Constable Stock Market channel. So depending on how you found the video, you may or may not be there, but you need to make sure that you go to the Rodney E. Constable Stock Market channel, and then you're going to click on this join button. Now, if you're not signed into YouTube, you will need to sign into YouTube. All right, and then once you're signed in, then you'll see this box pop up, right? Get access to exclusive perks when you become a member. So you click on the join button and you will see the information here, what you're going to get with your subscription, of course, your membership. And then you click on the join button and you want to add your credit card information. So as you can see here, you can pay with either a credit or debit card, enter your card number, of course, the month and year of expiration, security code, cardholder name, and your billing zip code. So I'm going to fill all of this information in, and I will be right back. So once you hit that buy button, which is in the lower right-hand corner of that box, that previous box, you will then get this pop-up. Welcome. It's great to have you as a member. So then you can click on the See Perks. So once you fill all that out and your membership is established, then you will have access to the membership area where you will be able to see the perks, right? And then you go over to the community tab, and this is where you will have access to the various videos, and you just click on those and it'll pull those up. Okay, so I'm going to back up here, and so this is where all the training videos will be, as well as the weekly updates to the simple market signals that will be under the community tab. And that's all it takes to become a member. It's quite simple. And you will have easy, convenient access to this information. Everything is on YouTube in the members area of the channel, and everything is in video format. There's no emails to mess with and no websites to log into other than, of course, YouTube. So just to review the membership details, the video membership to Simple Market Signals through YouTube is $19.99 per month. That's less than 67 cents per day, and it's billed monthly on your credit card, or you can pay with PayPal. There are no contracts. You can cancel anytime, and if you do cancel, your membership will remain active for the balance of that current month, right, for that prepaid period, but you won't be billed for the next month. All memberships are controlled by YouTube, so if you ever have any question about anything, just Google it, and the answers should be out there. Some of my clients tell me they make tens of thousands of dollars per year from the information they learned from being a client of Simple Market Signals. It's not often you have the opportunity to invest a few $100s per year in yourself and potentially pull out thousands or tens of thousands of dollars per year from that tiny investment. This year, give yourself the gift of financial knowledge that can bring you big rewards over your lifetime. Now let's recap what you will get as a member. As a member, you will receive the weekly video newsletter, which includes the weekly update on the proprietary market mode, also known as risk signal, on the overall U.S. stock market. You will also receive the weekly update on the proprietary market mode or risk signals on all 11 major sectors of the S&P 500. You will also receive the weekly update on the proprietary positive negative signal for the general trend indicator. You will also receive weekly market analysis on the overall market, and there's generally 12 plus and sometimes more than 20, right, depending on what the information I need to disseminate, but there's generally at least 12 plus charts every weekend covering all major areas, right? Small, medium, large, growth value, all of that, including several international charts. But all of this is over and above the proprietary risk signal. So the weekly market analysis alone, guys, is worth far more than the $19.99 a month that we're talking about here, okay? Plus, you will receive occasional bonus charts as deemed necessary and appropriate for whatever's going on in the markets, all right? So that's bonus material that I do throw in from time to time, and that can be extremely valuable to you. Plus, you will receive special midweek updates when warranted. So again, if there's something going on in the markets, if there's a signal change in the middle of the week, we will put out a midweek update video so that you can stay current on the information. We'll get that out as fast as necessary, okay? And you'll also receive access to the growing video library of best practice educational videos that are part of your membership, and that will continue to grow over time, all right? Again, you're going to get all of this for just $19.99 per month. That's less than 67 cents per day. So join now to start benefiting immediately from this valuable and potentially life-changing information.